Welcome back, everyone, to part 2 of our deep dive into the BRICS Bridge. In part 1, we set the stage, and today we're getting into the nuts and bolts of how this revolutionary system works and what it means for global trade. So, let's jump right in. The BRICS Bridge isn't just another financial messaging system. It's a direct, high-speed connection between the central banks of member nations. Think of it as a superhighway for money, bypassing the old, congested routes. We're talking about a system built to handle a staggering 20,000 messages per second. This isn't just an upgrade, it's a complete paradigm shift, leveraging the absolute latest in digital payment technology. What does this mean in practical terms? It unlocks a new era of financial independence and efficiency for its members. The game has officially changed. So how does it actually function? Let's break it down into a simple, step-by-step process. Imagine an exporter in Russia wants to sell goods to a buyer in India. First, the exporter's bank fires off a message through the bridge system directly to the buyer's central bank. The system then facilitates instant settlement. Here's the key. This settlement happens in their own local currencies. The Russian exporter gets paid in rubles, and the Indian importer pays in rupees. Notice what's missing? The US dollar. The entire transaction is completed without ever touching the traditional intermediary currency. Let's use a real-world example that's already happening. Russia is selling massive amounts of oil and gas to India. Before, this would have involved complex dollar-denominated letters of credit and currency conversions. Now, with systems like the bridge, they can settle these multi-billion-dollar deals directly, ruble for rupee. It's faster, cheaper, and removes their exposure to the policies and fluctuations of a third-party currency. It's a powerful move toward economic sovereignty. And it's not just the core BRICS members. The influence of this model is spreading. Take a country like Ecuador, which is a major exporter of goods like bananas and shrimp. They are actively exploring and testing similar direct payment mechanisms for their exports, with plans for implementation around 2026. They see the potential to trade with partners like China or Russia and get paid directly, strengthening their own economy. International financial institutions are even providing support for these tests, recognizing this is the future of trade. For a banana farmer in Ecuador, this isn't some abstract financial news. It means their trade could be revolutionized, making it easier and more profitable to sell their products on the global market. Now let's talk about the economic impact, because it's massive and it's happening right now. The most immediate effect is on the demand for US dollars to settle international trade. As more countries adopt these direct payment systems, the need for nations to hold vast US dollar reserves is decreasing. We are already seeing this trend begin, and it's putting real pressure on the US economy, which has long benefited from the dollar's status as the world's reserve currency. It's a fundamental shift in the architecture of global finance. But on the flip side of that coin is an explosion in what we call South-South trade, that is, trade between developing nations in the global South. By removing the friction and cost of dollar-based transactions, countries are finding it easier than ever to trade with each other. We are seeing projections and early data showing this trade bloc could see a growth of up to 35%. For nations like Ecuador, this opens up a world of new possibilities. They are no longer solely dependent on traditional Western markets. They have more options, more trading partners, and more control over their economic destiny. What we are witnessing is a significant power shift, happening live, right before our eyes. Of course, no major change comes without its pros and challenges. Let's look at the key wins first. One of the biggest advantages is for small and medium-sized businesses. For too long, the high costs and complexities of international currency exchange have been a major barrier. With the bridge, exporting becomes dramatically cheaper and simpler. An entrepreneur in Brazil can sell their products to a customer in South Africa and get paid in their local currency without losing a huge chunk to fees and conversion rates. This democratizes global trade. For a country like Ecuador, it means they can sell their local products, in local cash, to a much wider audience. But we have to be realistic about the challenges too. In the early stages of adoption, there will likely be some volatility. As central banks and commercial markets adapt to these new currency pairs and settlement systems, we can expect fluctuations. Building trust and liquidity in these new channels takes time. There are also technical and regulatory hurdles to overcome to ensure the system is secure and interoperable across different countries' legal frameworks. However, the consensus among experts is that the long-term upside is massive and far outweighs these initial growing pains. The core idea is to build a more resilient, multipolar financial world, and the BRICS Bridge is a cornerstone of that vision. It's not about replacing the dollar overnight, but about creating viable alternatives that give countries more choice and control. As this network grows and matures, it will fundamentally reshape trade flows and investment patterns for decades to come. We've covered how the bridge works and its immediate economic impact, but how can you, as an investor or business owner, position yourself to benefit from this monumental shift? That's what we're diving into next. Part 3 is where we get into specific investment strategies. We'll explore the sectors and markets poised for growth and discuss how to navigate the opportunities this new financial landscape presents. I want to hear from you. Comment below and let me know what aspect of the BRICS Bridge is grabbing your attention the most. Is it the technology, the economic impact, or the potential for your own country? Make sure you subscribe and hit that notification bell so you do not miss the final part of this series. The full breakdown is coming soon. Thanks for watching, and I'll see you in part 3.